A live Bank of Japan decision waits in December as traders gamble on a rate hike. Welcome to Macro Matters, your regular look at what's driving the global economy. I'm Peter Devlin. Central bank decisions seem to become more predictable, but not in Japan. Last week, Bank of Japan Governor Ueda said it's impossible to predict the outcome of the central bank's December decision. Tokyo inflation accelerated more than expected in November, marking the last government inflation report before the central bank meets. So, as the economy moves broadly in line with the Bank of Japan's projections, is December looking less of a lottery? Well, to help answer that and more, I'm joined by Shigeto Nagai, Head of Japan Economics at Oxford Economics. Welcome, Shigeto. Thank you very much for joining us. So let's look at the swaps market now, pricing in a 61% chance of a rate hike in December. That's about double the odds at the start of the month. Are the conditions right for the Bank of Japan's next step in policy normalization?
I think they are ready for the next hike in December. I also thought 60% chance of a rate hike in December and the rest 40% in January. But all the conditions, consumption, income, everything's in line with their wage dynamic story.
So uncertainty is still high for the outcome in December. So what are the hurdles that could throw off an interest rate hike with just under 3 weeks to go?
There's some possibility that BOJ needs to check another round of data to double check that real income will rise, reflecting a strong outcome of the spring wage negotiation this year. And also, although consumption has been robust or resilient, it lacks buoyancy. So they may want to see another data to confirm that all this wage-driven inflation dynamics is on track.
So political opposition also playing a key factor for the Bank of Japan. Some officials noting that the bank shouldn't rush to make any increases in the benchmark rates. So will the BOJ remain independent in its policymaking?
Prime Minister Ishiba really succeeded former Prime Minister Kishida's Kishidanomics. And Mr. Kishida really initiated this monetary policy normalization. And the opposition's party, no party is really formally opposed to this monetary policy normalization. And one of the largest opposition's party rather advising the BOJs to target lower inflation rates so that they don't have to do too much on monetary easing. So in that sense, at least for the next hike, there's no serious political pressures to stop it.
Well, market participants have been fairly critical on Ueda on the lack of communication. Could we see stronger guidance going forward?
Data-dependent decision-making is not very standard in central banking globally. And without any strong forward guidance indicating the direction for the next move, I think this kind of neutral data-dependent stance is it's fair communication for financial markets, I believe.
So finally, Shigeto, let's just look at the yen. It did surge overnight to the strongest levels since last October, as taking the currency further away from the risk of intervention. With the risk of a stronger US dollar under a Trump administration, will the BOJ use this as a reasoning to move faster than expected?
Today's yen move was a bit more speculative move, and we basically believe that the US dollar will remain strong in the couple of quarters, which will give a more yen weakening pressures. And as you said, I think this will justify the policy normalization by the BOJ, but at the same time, they have to go very gradually. And also there's a limit that they can raise rate only up to 1% in our view. So their gradual rise in policy rates will not be changed, but at the same time, they will communicate that there's very strong appetite for policy normalizations to fend off any yen weakening pressure.
Shigeto Nagai of Oxford Economics, thank you very much for your thoughts. And that's Macro Matters. Don't forget, you can watch more videos on Reuters.com.